Bank of Japan is standing at a critical crossroads as it prepares to maintain its current interest rates amid growing fears about the impact of U.S. tariffs and signs of economic slowing in America. This decision is incredibly significant because it not only reflects Japan's cautious approach to uncertain global pressures, but also shapes the future economic landscape for businesses and consumers alike. But here's where it gets controversial. While many expect the BOJ to resume raising rates soon, the exact timing and strategy are far from clear, stirring debate among economists and policymakers. On the morning of September 19, 2025, after a two-day meeting, the BOJ is set to keep its short-term policy rate steady at 0.5%. This move follows closely on the heels of the U.S. Federal Reserve's recent decision to cut interest rates further to combat a weakening labor market and broader economic softness. The Fed's actions underscore the fragile state of the U.S. economy, which directly affects Japan's recovery prospects, especially since Japan's export sector is already feeling the heat from tariffs imposed by former President Donald Trump. Market watchers are keenly awaiting the remarks from BOJ Governor Kazuo Ueda during the post-meeting press conference. Everyone wants to know, when will Japan restart rate hikes? And how deeply will the BOJ weigh the effects of American tariff policy? Experts like Kei Fujimoto, a senior economist at Sumi Trust, speculate that while rate increases could begin early next year, officials will first need to carefully evaluate how tariffs are impacting corporate earnings and whether businesses are in a place to continue raising wages. This suggests the BOJ is not rushing, but responding cautiously to evolving conditions. On the surface, the BOJ's outlook remains optimistic about a moderate economic recovery. However, Ueda is expected to express lingering concerns about ongoing uncertainties in the global environment. Adding to this complexity is Japan's internal political shakeup, with Prime Minister Shigeru Ishiba stepping down and a leadership contest scheduled for October 4th. The future direction of Japan's economic policy may hinge on electoral outcomes. One notable figure in this political race is Sanae Takaichi, a vocal opponent of BOJ rate hikes and a frontrunner for leadership, who intends to announce her policy platform shortly after the BOJ meeting. Her stance invites debate about whether Japan should prioritize stimulating the economy through looser monetary policies or begin tightening to control inflation. Speaking of inflation, Japan's core consumer prices rose by 2.7% year-on-year in August, marking the third consecutive month of slowing yet remaining above the BOJ's 2% inflation goal. This creates a delicate balancing act for policymakers. Global uncertainties might justify a cautious pace in rate hikes, but persistent inflation and a tight labor market push some hawkish members of BOJ's board to warn against keeping borrowing costs too low for too long. For example, board member Naoki Tamura has emphasized the importance of acting decisively if inflation pressures build further, stressing the central bank's role as the guardian of price stability. The BOJ's monetary easing era, which lasted over a decade, effectively ended last year when it lifted rates to 0.5%, brimming with optimism that inflation targets were within reach. Governor Ueda, while committed to continuing rate hikes to ensure price stability, has signaled a careful approach due to the uncertain repercussions of U.S. tariffs on Japan's fragile economic recovery. In summary, the BOJ's decision to hold interest rates steady is a strategic pause that reflects the complex, interconnected challenges facing the world's third-largest economy. It shines a light on the delicate dance central banks must perform when domestic growth, inflation targets, and international political tensions collide. This also raises a fascinating question for you. Should the BOJ act more aggressively to tame inflation? Or is prudence the smarter path given external uncertainties? Share your thoughts and perspectives. Do you agree with the BOJ's cautious stance? Or is it time for bolder moves?